Aussie dollar daily forecast, May 21st, fxempire.com. The Aussie dollar pair fell on Friday as the risk off attitude continues to haunt the markets. The Aussie is suffering at the hands of the fear of European debt issues and the risk assets around the world fall in value. There is less interest in owning this currency. The Australians export quite a large amount of raw materials to the Chinese, and it now appears that the Chinese economy is starting to slow down again. With this being the case, there will be fewer orders for copper from Beijing to Canberra. Because of this, there will be less demand for the Aussie in general. The trading world loves the idea of using Aussie as a proxy, and if the global economy is doing well, there's a good chance that the Aussie dollar is going to appreciate. The opposite is true as well, as we've seen recently. When the economy is doing poorly, there is a tendency of larger firms to convert everything back into US dollars so that they can either buy blue chip stocks in New York or buy US treasuries. This is the classic safety trade. This candle does, however, look a little bit like a hammer from the Friday session, so a bounce could be coming. Looking at this chart, though, we can see that 102 was obvious support previously and hasn't really truly been tested as resistance, as it should offer. A bounce here looks like an opportunity to sell this pair at higher levels, and we have a couple areas that could come into play. Parity's one, and then of course we also have several red candles that shows that the sellers have been fairly active on the way down. A break of the lows of the Friday session, of course, has us selling as well. We're not interested in buying this pair anytime soon, and the global outlook will certainly have to better itself before we do. One outlier could be further easing by central banks, but as we've seen recently, central bank easing is becoming less and less effective. So any pop from that for the Aussie dollar more than likely will be a favorable rally as well.